Good morning, everyone. Welcome to the Wavy Tunnel Market Outlook for June the 22nd, 2026. Before we start, if you just take a quick moment to read the presentation disclaimer that it's for educational purposes only. And then once you've gone through that, we can kick into what's going to happen this week. So as you can see, not too much, some bond auctions, which should have happened. Let's have a look and see if the results came out. Ooh. Shows you when you want to get clever. Anyway, there's not a lot of news out. I'll tell you what's going to happen this week is on Wednesday, Micron Technology. Watch the earnings because that one has been parabolic. So this is what you need to, this is the focus for the week. Let me just see if I can get back to this one, countries, clear, and just go to the United States. Because there's nothing out today. No, there was nothing out today. Tomorrow, ADP and PMI might be of significance. And Thursday, PCE, and that's closely followed by the earnings that we just mentioned on Wednesday after the close. So latter half of the week where all the excitement will come from, unless we get something from the Middle East, but it looks like it's trying to calm down. So let's go. Euro dollar. Let's start with sterling because I was talking about the political turmoil there, and the prime minister resigned this morning, and the market was off on the rumor of the resignation, and then rallied on the outcome of the resignation. Markets are, for me, are still limited. I still think they in limbo. I still think they are looking for um, clear direction. The everything last week went well for the US. I think the new Fed governor was very well received. All the talk that came out of that post the meeting, everyone seemed to be positive. The market seems to be pricing in a couple of interest rate hikes. The tone was reasonably hawkish, and that everything would be done to combat inflation. So that's going to probably keep dollar boosted in the short term. So in sterling, I would be looking at this level up here at 133, which would complete this, fill the gap, and come into this previous area of support, which is now turned into resistance with one test that was back last week. So if we were to get above this 133.25 area, I could see us extending all the way up into this higher time frame tunnel, and this area up here, which would be then the previous break point. So for now, I would think that you would be wanting to sell rallies. This is not trading advice. It's just something that I'm looking at. But a break of that, you could see quite a dramatic move all the way up above 134. So this is your pivot area. This is the area you want to be looking at. In between, I think it's a good idea to stay out. And then have a look here. This is it in a little bit more detail. So I think any extension into this area would be a good selling opportunity. Then let's go to the euro. And not too much excitement there. You can see what happened end of last week. The Americans were on holiday last week. Today we came in a little bit negative to start, but we've sort of tried to regain some of the losses that we had earlier, but there's no clear direction for me. So the wave for now is your friend. You've got your trend lines that are in place. You've got your possible fill the gap, which would then come back into this area up here. And then that would probably slow you down. So the range is pretty well defined. And there it is there. And I would just play the range. until you get a breakout. So for now, look at possible, long positions around 114 and a quarter, and look for sells at 115 and a quarter, and just play the range. In the middle, don't get involved, because it can be deadly, because you might get caught. So just frame out your chart, look for what the wavy tunnel is telling you. You can see what's happening here. If we break below this, what have we got? Massive divergence. So there's no momentum. There's no momentum at all. There's not a lot of activity going on in the currencies at the moment. We also then going into the summer months, so it's going to be holiday season. So markets are going to be a little bit more subdued than they normally are. And then liquidity also dries up, which means when you do get something that's happening, you can get a few exaggerated moves. So just be mindful of that. Then the Canadian dollar has stopped its grind higher, and it's looking to do something up at this upper level here. So let's just go into a slightly lower time frame here and see what we've got. So here's your congestion area, and this looks like a sell to me. So there's my area that I would be watching. A pullback into this area up here, close to 142, and then I would be looking for a deeper sell. And what I would be looking for here, there's probably quite a lot of, because look at this. This has been a massive move. Look at all this. So you can see in this that you've had a grind higher for a couple of months, and this is due a correction. So even if you've got to move down to 140.32, that's nice, even if you've got to fill the gap trade. So this one looks like, so let's go and see if we can dig in a little bit deeper. And so I would look up here where I've marked it out, and your break area, you can see, is here. And then that would get you into this territory to fill the gap. And then you can see where your Fibonacci's are for the entire move. So that's not dramatic. So this is potentially a good risk reward trade. So looking for possible setups in this particular time frame. This is in the 5 minute. You can see now any pullbacks in here. I can see the trend lines there. That's not a lower low, but otherwise I would connect that high and that high, but I haven't got a lower low. So, but I'll just draw it for the sake of argument and put it in there, because it'll just help us a little bit as well. So you can see this whole area here. So what have we got? We've got 3 areas of confluence. We've got an area that we've mapped out from a higher time frame. We've got a tunnel. We've got a trend line. We've got a fill the gap. So we've got a number of criteria here that could possibly help us with a short for a move into this box and possibly lower. The only thing you need to be careful of is obviously if we break above 141.79. So you want to look for trades that are as close to 140, 141.80, let's call it 80, just in case. And why do I say that? Because if we break above these, you're probably going to get a move that is equal to this. So you're going to get a 30-point move from this area here, which will probably take you to the previous highs and maybe just slightly higher. So I would watch that on the Canadian dollar. The yen has been a little bit eventful, but it's probably news. I haven't heard anything about intervention, but we've talked at length about this 160 area, and there we saw something. I haven't had it confirmed that this was intervention, but it could be. I wasn't watching it today, to be perfectly honest, and I didn't hear anything because I think all the noise was around what was happening with the ceasefire negotiations. So clearly defined levels here. You can see where your areas of importance are. And so we would consolidate in here, which is all above 160, which will not keep the Bank of Japan happy, but there's obviously something that happened here. So what you could happen, look at this. now you can see what happens post that. You get this grind. So watch for levels back into this box. And again, it's difficult shorting this without, this was something, and it could have been intervention. So, yeah, there's something here now because this is the second hour that it's trying to go lower and it can't break. Well, we need to break below here, and then we could push back down below 160 into this 159.92 area. Aussie yen, that was the one that we looked at as a, and this looks like it could and might want to break lower. We're going to watch this area here now to see if we can get a continuation. They're not nice patterns, so and so it's very, very difficult. I'll pop over to the futures and we can go and have a look at that. And let's go and see what's going on in the futures. Nasdaq, you can see what's happened. There was a strong rally on the market open this morning, pushed into previous all-time highs, and then a strong reversal of that level. And there it is. So strong push up this morning. I watched the open last night, and the market gapped lower, but very, very quickly filled that gap. And we've spent most of the day grinding higher, and strong reversal in the last hour. You can see now we've got a bit of an area here down at 650, which is going to give us a decision. So you still got another 40 minutes of this. So let's have a look and see how this plays out. Our areas are holding very nicely. So you've still got all the areas that are supporting and resisting as we've been laying out for the previous number of weeks. So we're pivoting around the tunnel at the moment on the 15-minute chart. You can see here, this to me is a strong fight. This is a good battle. The buyers and the sellers are well entrenched because you can see by the wicks. So here's your zone. So break below here, close below there, we go into this box, break above here, establish there, we go back to the all-time highs again. So that's what we've got to do there. Micron will be the big one. What are the options telling us? Let's go and have a quick look. And you can see the reversal here. So I was watching this area this morning. We got above it. I stayed out in this zone because it's chop, and then was looking for sells around the all-time highs. But it was white knuckle time because it looked very, very strong, and it looked like it was going to push a lot higher. So you can see that we've got this area here, high volume area, and zero DTE high volume area, which is at let's call it 3,500. So that's an area to note. And this area here at 350. This is a strong rejection. We need to see what happens now in this hour with this wick, because that was a strong rejection of that. The gamma level and the core resistance 0 DTE. So this will be a big fight, this 30.5 area. So the range looks quite defined, 3,500 to 3,100. So that is the Nasdaq. Let's have a look at the S&P. Similar rejection. Now, what do we notice about the S&P and the Nasdaq? The Nasdaq went back to all-time highs and the S&P didn't. It fell well short. These levels are from the all-time high up here, just short of 77. And you can see we've retraced into this zone that we've always liked, the 77, 70, 70, 75 area. Strong rejection. Again, indication will be on what happened with this candle here. Look at what happened here. That was a strong rejection area and a good support area. So this 75.20 for me is important to watch. Let's bring the options across. What do the options tell us? And you can see it pulled into that zone, got into the zone, and strong rejection. And we've come into here. So you can see the S&P is weaker than the NASDAQ. You can see now that we might get into pushing lower, and that could extend all the way down into 75. So watch 75.60 now. And if we don't go back above 75.60 and close, we will probe 7,500. So that's the S&P. Gold, nothing. It's just ambling about. Gold is in no man's land. Central banks are the buyers. A lot of people still think that this is going up. It's divorced itself from that traditional safe haven status that it had because of the bias by the central banks globally to buy gold because of all the particularly people that want to move away from the US dollar. So China, a lot of Far East countries, Russia, etc. So they've been the big buyers. But obviously the problems in the Middle East and the oil crisis caused them to liquidate some of their longs, and that's why we had this strong move lower. But the buyers will return when I think everything settles. You can see that we broadly trapped between what we've identified as 40.50 and 4,400. And so for me, there's not a lot to do unless you're just observing the structures within your wavy tunnel indicator just to see if there are opportunities for you. This one, leave alone. We're below this area here now. This to me looks very, very stretched. And what, you know, I always knew they liked selling oil on rallies. I was shocked at the level that we currently seen. I can tell you for nothing that we haven't seen the lower fuel prices at the pump with this lower price. We certainly got the aggressive hikes, but we haven't had any aggressive cuts. So oil companies are going to be posting great results. I don't know what to say here. There's gaps here. It doesn't react. There was the reaction to possible issues overnight with the ceasefire negotiations and Israel attacking Hezbollah in Lebanon, etc. It doesn't care. It's just coming lower. Look here, massive divergence. But do you want to catch a falling knife? Not really. So stay away. We just look at it for interest purposes. And I think that would be that. It's very difficult trading at the moment because we are susceptible to too many variables and too many tweets. which make, and that's why I, wait for extremes. If there's noise and you cut in the middle of a range, stay out. Don't get involved. Stay out. Don't be looking for trouble. You can see here, like we've marked this up on the NASDAQ now. So there's nothing to do here because you can only get chopped up. So wait, be like a vulture and just be patient. So.
Sounds good, Mark.
That's it.
Yeah, very good. Thank you.
Well, thanks, Mark. Enjoy your vacation.